Hello, hello, and welcome to another episode of Trade With Me. I'm Darky, also known as Dan. If you like this series, please like, subscribe to our YouTube channel. You'll get updated every time I do this. Also, you're more than welcome to join our Discord server. It is free to everyone, and we do this live pretty much every Sunday. So yeah, if you want to hang out, we do a Q&A afterwards, so there's always lots of fun things. And of course, the little pre-show can be a little zany and wacky as well, which those of you watching the recording don't get to participate in. So anyways, guys, I don't want to take up too much of your time with that intro, though, so we are going to hop right into it. Trying to save more and more on time as we move forward with these because, well, an hour is a long time to, set aside for a trading video. Today, we have chosen and selected June 16th, 2021. And one thing that I'm starting to notice about picking random days is that it's getting a little bit challenging moving my levels around to get them in the right place for us to chart out what we're looking at. So I'm thinking maybe in the future we might pick like weeks at a time that are a little bit closer together, just so that way when we're doing these videos, the setup process doesn't take quite as long. But I digress. That's really not important to what we're doing. So June 16th, 2021, we're going to approach this as if we're just sitting down. We just finished charting everything out, and now we're going to kind of build our narrative for the day and figure out how we're going to try and trade this beast. So first thing we're going to do, let's take a look at our longer term chart. So this is going to be our 3-month, 1 day, and try and get a feel for what's going on here. So it looks like in the months leading up to June, had a pretty wild, aggressive gap up. This actually sounds pretty familiar. I think looking at this, I'm remembering we did some trading back in here around March. Yeah, it sounds about right. April, March, June. Yep. So I believe it was somewhere around in here. Anyways, so as we were coming into June, we can see that our 90-day point of control has kind of started to build out as a support for this most recent rally that we've got going on. So once we kind of broke through this point of control, it looks like we found that unfair high. Sellers tried to sell us back down, at which point we did find our support and we found buyers willing to buy below that point of control, prop us up a little bit higher, and push us into the next leg of this rally. So that's where we're at now with that. It looks like price is currently leading value. We'll have to take a peek at our more near-term charts to really identify that and get in on that. But for now, it definitely does seem like things are moving in that direction. So let's go ahead and check what our 1 month is doing. Again, we're not going to really get a much different story here, but I just kind of wanted to stress looking at the midterm value areas and where we are in relation to that midterm point of control. So we talked about how as the month started, we found that unfair high, we came down, 90-day point of control became our support, we launched back up. So it looks like once we came up from that and we did test those highs, we came down to test another support, but look at this, we've got a new support that has built, and that is our midterm point of control. Remember, guys, as I've told you before, points of control are very, very often these spots at where new beginnings, major reversals, big events tend to happen at our points of control. They tend to happen on our near term, on our midterm, on our long term, but they do happen more in more relevance to the time frame that they're looking at and for. So as we move into our near term, we're going to kind of point out again how we've experienced something very similar to that as well. So now we're going to look at our 5-day 30-minute. Sure enough, we're popping up, looking for that unfair high. Next day, come down to test. Looks like our value area was acting as our support there for the near term. Coming back up, made some new highs in the overnight. Wasn't quite ready. Pushed back down, but look here. the selling activity was not able to generate enough momentum to push us back down to that near-term value area as it was developing. And it looks like we actually spent a good deal of the day, kind of balancing over the point of control till a massive end of day rally on Monday, June, what was that? So we're in the 16th here. That's what we're looking for. 15th, 14th. So June 14th of 2021. That was a pretty major rally. Okay. Let me rephrase this. I'm calling this a major rally just because of the size of the candlestick. But there's something that I want to point out to you guys. So that's 423.74 at the base of this candlestick, right? 423.74. Look at the top of this candlestick. 425.28. Okay? So that's not massive compared to the kind of price action that we're looking at right now. So one of the things that we want to take forward going into this particular trading day that we're going to be looking at is to recognize we can't let the bias we've been experiencing in our current market conditions affect how we're going to trade these market conditions. So this is going to be a really good exercise for us. One of the things that we can note is that the price activity, the ranges, are very, very narrow compared to what we've been seeing. I mean, $10 swings are normal right now. And it's weird to say that. Like, I mean, it feels normal to us because we've been exposed to it so much. But I mean, look at this. This is 5 days in June. And I mean, these are barely $3 ranges, top to bottom. So, just kind of giving you an idea. Actually, this day right here, even with this massive climb. So here's 423 right here. Here's 426 up here. So that would be a $3 range. This is not a $3 range, even though it looks fairly massive. So wants to be paying attention to that. We definitely can't be quite as aggressive with targeting plays, but that's okay. We've kind of got that in the forefront of our head. We're paying attention to that now. We're ready. So after we had that massive end of day rally, we ended up having an overnight session that ran up, but then just as quick as it ran, it looks like we ended up coming back down. And if we look, we can see that right where this candle really found its burst. So, I mean, we've got a wick from here to here. So the bottom body of that candle, it looks like is where we ended up coming down and finding support on that following day. So one thing that we want to notice here is that we've got these rising lows on our daily, right? Because I mean, this would be 5 days. So rising lows on the daily. The highs, not so much. They're not really, pushing too aggressively. So this tells us right now that market activity isn't super certain about this, right? Price is trying to lead value right now. And as we've discussed before in previous videos, when you have price action driven markets, they do tend to be a little bit more spooky, not spooky, but they do tend to get spooked a little bit easier into one direction or the other, and they can kind of get corrected. Because once you're outside of value, I mean, it's right in the name, right? Value is right in the name. So if you're outside of value, well, it stands to reason that unless value is in fact higher, we should move back down to it, and we should kind of see like a steady stacking value, which what we're going to look at next is going to give us that notion and idea. So over on my right screen, I'm just going to move this over for you guys so you can see this. Here's the same price action that we were just looking at on our candles, but now we're going to look at it in our expanded monkey bars with our volume profile overlay. So we can see that we had value jump from this zone up into here. It spent a couple days stacking and condensing, and then we had another value jump. So we're in kind of this upward push. It definitely seems like things have been getting tougher and tougher to push up, but we are also noting this theme of higher lows. So here's where we're going to set. Oh, we're in practice levels. There we go. So here's where we're going to set our targets for today. If we end up taking out this value low and our overnight low, that's going to be a pretty bearish indicator for me. So looking at kind of where price action's been situated for the last 3 days with our condensing value, I'm going to target our first point of control area right here. This is where my low target would be if we end up flipping bearish on this day. Our upper target, however, definitely not way up there. I think our upper target for today is very healthy to call it at the previous day high. So this is where we kind of started and then sold off. So we're going to put our upper target right at that previous day high. I think there's a good chance that we end up challenging that if we prove bullish on the day. All right, guys. Yeah, good old moon. Oh man, wasn't too long ago that that's where we thought we were going forever and always, and because stocks only go up. But anyways, I digress. Okay, so we've got our upper target, we've got our lower target. We know where our overnight high or overnight low is currently. Now, where are we currently trading inside of those? That's going to be the next big thing that we want to be paying attention to. All right, so we've got our overnight high, overnight low. We're about to open right up at our overnight high, which means we are at the top of value. Because remember, our overnight high is pretty gosh darn close to our previous day value high, which is right up here. Also happens to be where the midterm value high and our 90-day value high is. So here's our next question with our upper target and our lower target. Where is our bull line and where is our bear line for today? Well, we know that points of control often are areas for starting new beginnings. And we know that if we can contain price action to one side or the other, it definitely helps us kind of build our narrative for the day. So what I'm going to go ahead and say for our bull line, if price action can maintain itself above our previous day point of control, I think that's a very strong indicator that buyers are going to be in control today, and we'll have a much better chance of hitting our upper target as long as we stay above our previous day point of control. Now, vice versa, where's our bear line in the sand? Well, we kind of already talked about that with what was going on. This previous day value is going to be kind of like our first soft bear line. If we break previous day value, we're definitely going to want to assess what's going on and see if it warrants getting bearish on the day, maybe early. But I think it's our overnight low that is going to be our line in the sand. We cross below that. Sellers have absolutely wrested control, and we should expect to test our lower target level today, which, I mean, given the fact that the range on the market is really narrow right now, it's not a big move. So we're going to be playing pretty aggressively with our contracts today. Looking at the pricing, we'll take a peek at this right as everything opens up, just so we can get an idea of what the starting price for our contracts are going to be. But remember, we tend to target contracts that are between 150, 160, somewhere in there. Ideally, we are looking for the 40 deltas. That's my preferred target for some of our earlier trading, unless I'm making my move to actually target a specific strike. Then looking for something 20 delta or even less if I believe that that's where the strike that we're going to be heading to makes sense, then I'll do something like that. But I digress. All right, guys, we have definitely spent some time really analyzing this and getting a good idea of what our narrative is going to be saying to us and where we are going to be looking and paying attention to see what this market's going to try and do. So without further ado, let's go ahead and slam that play button, turn it up to 11, and by that I just mean speed it up 3 times, and let's see what happens here. Boom. All right, so we are out of the gate. And real quick, I'm just going to pause this for a second, guys, because again, we wanted to look at our contract pricing. So it does look like we are going to be playing right at the money today. It's a little scary that the delta is at 0.59, but here's the thing that we need to remember with that. The price range is very narrow, right? So a delta 60 isn't actually as scary as it sounds. A delta 60 would only be scary to us if price range was actually moving really aggressively. Because remember, our delta is telling us that this particular contract If it moves $1 in our favor, we're going to gain 59 cents in intrinsic value. If it moves against us, we're going to lose intrinsic value by 59 cents. So with our current market activity, that's definitely why I tend to play a little bit lower. And yes, as somebody in chat brought up, we can also kind of look at what our implied volatility is. And yeah, that's really, really low to what we've been experiencing recently. So yeah, contracts are pretty gosh darn cheap right now. But yeah, let's get to it. Okay. All right, so right out of the gate, we are crushing through our overnight high. We're breaking those value highs, all that. We're not going to make an early play on this, I don't think, especially not because we're so net long. With how bullish everything is, it doesn't make me feel confident in playing a fade off of our value high areas. So we're going to let this play out a little bit instead of trying to be super aggressive on the open. Of course, it is, just pen and paper. This is on demand. This is practice. So, I mean, we definitely could have faded that. And look at that. Looks like fading it would have paid off. Could have made a nice quick move in the beginning. Had a little bit of money to start the day. Oh, wow. Forgot how quick 3 times speed moves. We have now broken our halfback, our pivot point. Sellers definitely seem to be showing some control right about meow. We're going to move some of these so we can see our major levels on our other charts. All right, so here's our previous day point of control. Now remember, guys, this was the area we were talking about, saying that we ideally want to see buyers keep activity above that if we're going to be getting bullish on today. So we're very close to where we might take a long position. I'm going to let this play out a little bit more because we do get some bounce off coming from here, and our clouds are starting to get closer to touching. And I definitely think wow. That's a pretty aggressive wick. Now, of course, remember, guys, it would not be moving quite as quickly as this if we were in real time. Remember, we are 3 times sped up. So this is going to help us kind of hone our skills a little bit because we have much less time to react when we're watching it move this quick, which kind of in a way is good. It gives us less time to second guess ourselves and really trust in our gut instincts and our analysis. But that's also why we have to make sure that our entry points and our exit points are super ironclad. Like we know where we're in, we know where we're out, so we don't have to futz around with this. I did just say futz, by the way. I know that may have been a little muffled, so just want to make sure nobody thought I used a naughty word there. Okay, so we've still got this kind of battle going out here. I can't really see where our VWAP is. Okay, now I'm starting to see our VWAP develop. So we've definitely been testing our VWAP. If we break this again, I'm going to go ahead and enter a long position. I want to hold off for a bit, though. I think this may take a little bit of a dip before it comes back up to test VWAP a little bit later in the morning. So we'll see. We're still getting this closing action on the clouds. Very narrow price action. This is pretty dirty. We've got a little bit of a wedge forming on the day. Previous day POC looks like it's going to, and we're short. Okay, we're going to go ahead and take a short position here, and we're going to get out of this short position if we break POC. Sorry, VWAP. So unfortunately, given how everything is, we do have to give ourselves a little bit more room for error. But given the price of the contracts, the implied volatility, it shouldn't hurt too much. All right, looks like our short might be paying off. We're coming down to this point, though, I mean, ideally, I would have liked to see it come down here before we take a piece off. We do have a crossover event, so that's making me feel a little bit more comfortable and confident. I think our stop out point now, instead of VWAP, we're going to use our 48 exponential moving average. If price action breaks through that, we'll go ahead and cancel this position and take the loss, because it still probably would be a loss. We entered close to VWAP, but we'll see. Actually, I do want to pause this real quick just so we can take a timestamp. So we entered right here, 940. Okay. Because remember, at the end, we got to kind of go back and look at what contracts we're doing at those specific times, so we can kind of get an idea of whether or not we made money or lost money today. So we're still watching this. Sellers don't appear to be dominating because we didn't make a new low here. We did have the crossover event. Buyers aren't seeming too super eager quite yet. We are hanging out at that point of control, and we are definitely going to shave a piece. So right there, we're going to take a piece off this candle. It's at 945. Because remember, we always like to take our volatility plays, and especially when there's a potential for a bounce event, because this is the first time that this support was tested, and it looks like we did make a new low on the day. So it seems like our support is actually going to be more of a channel support than it would be a flat support. So that's something to take into account, guys, when you're drawing out resistances and supports. We always want to make these horizontal lines, but the market does occasionally move diagonally. And your resistances and your supports are going to function the exact same way, but just on the diagonal basis. So we can actually go ahead and do this. Now, if this does break further, we'll adjust this, because we wouldn't consider that to be the actual break of the channel. You do need to have an opposite auction event, even if it's a small one, before you consider where the actual channel starts. But sometimes it's good to just have it in place, ready to go. All right, so we're going to go ahead and use the 200 now as our kickout point. Again, with how the market's been behaving and going, we definitely don't have a bearish bias on this, but we are short because that's where the play was, showing us that there was a play. But at the end of the day, we're going to be looking for signs to point to us that it will be time to get long. And our sign to get long, it won't actually be once the 200 breaks. It will be once VWAP breaks. That's when we're going to get long on the day. Now, why, may you ask? Well, you see, we broke through VWAP, came down to make our low. We came back up, and yeah, we broke through it, but ultimately, when you start to see where these wicks are touching down, VWAP is starting to act as our resistance. So we couldn't break it here. They're just the up auction was not ready to happen. So what that tells us is that the next time price action gets up to VWAP, there's a higher probability that it's going to break, and we're going to see a little bit of upward action. If it doesn't break, well, then we can start to ride the short again. But until then, we're just going to continue to play the price action that we see as it's occurring, as it's going on. We have no reason to get out of our play yet, because everything's still pointing like it's trying to test the down. We are also looking to see if we get an end of auction candle. So if this closes above this, we may consider taking our second piece off and then letting that last piece ride, just so we can secure a little bit more profit if this does start to turn away from us. But it looks like it's not quite done yet. All right, riding the support, and we are breaking. We're going to monitor this because, again, we're not entirely sure where we want to take our next pieces off. Again, the market's been very bullish lately. So with the occasional pullback, of course, if we were to try and look at these from a Wyckoff perspective, we're still forming our first test. So here's our low. So this would have been the climax, the reaction. Now we're still forming our first test. So once this finds its low, we should see some upward action. And that's just the nature of the beast in the auction. But now, whether or not it's enough to kick us out of our short position before we let this continue to develop, that's going to be, that will be remain to be seen. Starting to get some pretty awesome volume pushing back. That's a big wick. I think our lower auction is becoming exhausted. We're going to go ahead and take our second piece. All right, so we've got 1/3 of our short position left. We're going to let that either get stopped out, breaking the 200, or we're going to let it run all the way to our lower target. This looks like it's getting ready. Say we definitely took that second piece at the right time though, huh? I find that a lot of times it's when to take your profits, when to get out of the trade, that a lot of people actually struggle with quite a bit. And it's totally understandable. So what I try to tell people for figuring out, because I mean, right there, like, you look at it and be like, well, Dan, how the heck did you know to get out there? Clearly, you must have looked at this chart beforehand. Well, no, again, I don't look at the charts beforehand. I don't look at them completed because as much as this is a teaching, or as much as this is an educational experience for you guys watching, you gotta remember, this is practice for me. I'm not a professional trader. I don't do this for a living. I would like to one day, and I like to think that I've got a decent handle on a lot of these things, but I need to practice this just as much as the next person to make sure that what I think I know, I actually have really good command over. So why did I finally decide to take the profit there? Well, looking at this definitely is starting to look like an exhausted auction. It doesn't mean it is. It's just starting to show the signs. I mean, look at this. We didn't break that 200, so I guess it's good. We've still got that last piece. But when you start to see the auction flattening out, and then you get a pushback in the opposite that breaks the last candle in that rundown, that's oftentimes where your reversal is going to take place. Now, of course, on top of that, playing to the Wyckoff theory, right? We've got our climax, we've got our we have our reaction, and now we have our test. We don't know where the test is yet because we haven't had the reactive auction to that, but we can start to assume that as it's testing this level down here, as it's showing that it's trying to push back, we may be at the end of that test. And just because this is starting on a diagonal doesn't mean it has to keep going on that diagonal, all right? So that's why I, quote unquote, knew maybe I should take profit there. Now, of course, hindsight being what it is, if we didn't take anything there and we just kept riding this out, we could have taken a little bit more profit here if we saw fit. So, but again, we're just going to keep letting this play out because at this point now, we're going to be waiting for the bigger move on the day. We've already got our short position. We've already won. I can guess that maybe the top of the channel will be somewhere up there. But the other thing that we can do, because again, since we're kind of looking at Wyckoff theory, is we can guess that this is potentially where the reactionary level is. I mean, it is our 200, possible. I think our reaction is going to be higher. I think our reaction is going to break VWAP and it's going to give us a play from VWAP to the top of the channel, at which point we are going to go ahead and take probably 2/3 of our profit on our first long position if that's the case, but we'll see. But I mean, for now, we're still holding short. Now, another thing that I have noticed with EMA clouds, a lot of times when we do have breaches like this, generally speaking, it needs to hit the 48 or it needs to go through the 48 for us to have a higher conviction in it. But once it actually breaches the 13, there starts to be an increasing probability that the market is trying to reverse and push through. And of course, if that is the case, then this candle right here that we predicted to be our reversal candle, that was accurate. That was correct, because we can see that we still haven't made a low that has broken the low of our reversal candle, right? We haven't closed any candle bodies below that yet. So for all intents and purposes, this is now the auction getting ready to reverse. It's consolidating on a very small note, a minutia. But if we do get a candle that closes below that line, that'll be a good sign for the last short that we're holding. And it looked like it wanted to for a second there. Almost did. I don't know if I like that line. I mean, if not there, where? Maybe there, but that doesn't really change anything. It's a little bit narrow. I don't like it. But we can assume that this is now our working resistance and it's horizontal. And we can assume that this is now our working support and it too is horizontal. So we started in what looked like a down channel, but it may be shifting and changing. Come on. That was weird. So now that we have kind of figured that out, let's go ahead and get some actual channel lines in here. I mean, it does look like it's pushing more and more. So I think we are going to get naturally stopped out of this short, which is okay. That's fine. You know, we took a good volatility play, and we definitely grabbed our second piece at the bottom if it turned around. So, you know, can't get upset about that. That's good play. It's good play right there. Now, the next thing that we want to kind of consider with what we're seeing. So we're going to use market profile here to give us an idea. We haven't pushed back up above the 200 and we're in this consolidation, and this consolidation is happening at the bottom. So in market profile, market theory, auction theory, when you start to consolidate at the end, that starts to increase the probability of the move continuing, as opposed to the move looking for the opposite, the reactionary. So this is potentially a good spot for us to be sitting. It's also potentially a bad spot for us to be sitting. I mean, no matter what, when we get stopped out, we'll probably take maybe 1 or 2 cents on it. If we don't get stopped out, we'll take a little bit more on it. We are definitely starting to get some much bigger bottoming wicks, though. So with our consolidation, we very well could see a break to the top that touches VWAP and then reverses off of that. We could see a break of the bottom that does a nice little false break. Or, well, we got to make a decision real quick here, guys. If we're going to keep the 200 as our kickout spot, or if we're going to move it to VWAP or just above VWAP for the false break reversal play. The only reason I don't like the false break reversal play is because we've got all this space up here before we actually hit the top of what I figured to be the first channel. All right, we're out. I decided that we didn't change our break point. We may have, or it may have been the smarter choice to change it, but we had to make a split-second decision because that's all the time you're going to get. And we had the stop in place because remember, we execute that way. We make sure everything is already in place. So that way, if we do decide to make decisions, we don't have to make them in a panic, right? So I didn't make the decision quick enough. The market made the decision for me because I already had my stop in. So we are now out of our short position. And given where we entered, we probably took a cent or two on that. Not much because theta would have burned some of that. So now what I'm curious of is if this candle was the false break of the top channel that we've got going on here that will now run us back through clean to the other side, or if we're going to end up breaking VWAP and we take our first long play of the day. Well, I'll be a son of a gun. But that's why we have our risk management in place, guys. You can't always get them right, because the market is going to do whatever the market wants to do. But, you know, we practice these things so we have good ideas. And so we know where our good risk reward locations are going to be. So what we're going to wait for now before getting back in short is, yes, getting short here would be the ideal location. But now that we've got this false break, what we want to see is we want to see a true break of the bottom and then a retest to what would then be resistance before we get short. But a lot of times when you do get your false break, it will very quickly move back to the other side of the channel. And now we've got a test. This is the market determining whether or not this was a false break, and then this is the direction we're heading, or if we go back up. But that's also why we didn't want to get short in here. The risk to reward, awful. There's nothing to play off of. Because if we got short in the middle and then it flips back up to then break the VWAP and then run, because remember, long is what we're looking at for kind of like end of day, right? That's what we're thinking the market is going to be gearing up for. And the reason that we're still kind of thinking that is because we're still nested really close to this previous day POC, and we haven't gotten anywhere near our bear line yet. All right, so until that happens, we're still feeling bullish on the day, because if they can't rotate it down, which sellers have tried to do every day this week, it's pushed back up. So that's why we've got a long bias, but the long play just hasn't materialized yet, which is why we haven't taken it. Because, I mean, we could have gotten long right at the start of the day, but then we would have had to endure all all of this red before we maybe are eventually right. So just because you've got a pretty good idea of where you feel like the market and the price action may be moving by the end of the day doesn't mean that you should just jump into a position all willy-nilly. Willy-nilly. All right, we are coming up on 10:05 a.m., guys. So we've got about another hour, quote unquote, of market activity that we're going to trade because our plan is to be done by 11 today. I know it hasn't been super exciting. I mean, we took that one short play that now we're out of, and we're just kind of waiting for this consolidation zone now to reconcile itself so we can determine where we should be entering for our next play. But it looks like we're getting close to that long because, again, like I said, we're only going to test this VWAP so many times before we break through it. So we're eventually going to break through VWAP for the long, or we're going to end up coming back down and breaking through this support that we've tested a bunch. So in situations like this, I would already have a limit buy ready to go. So if it does pop through, I'll catch it with a good price. And if it, pops through way too violently, it'll just skip my order and not fill me. All right, we're in. We're going to use the break of the 200 as our stop out point. Now, even if this does end up failing, it doesn't mean that longs are off the table. Of course, our most ideal location would have been playing long off the channel. I mean, that's always going to be your most ideal location. All right. Let's see, what is this? This is our previous day close. What we got going on here? Anything too crazy? All right, we're starting to push on through. We're going to go ahead and set up a limit sell to take advantage of some volatility if we push up a little bit more. Because I definitely am expecting that it is going to find a top for this kind of diagonal channel that we started forming. And that does seem to be lining up with our VWAP +1. So I think that's a good spot to take our first volatility sell. And we got it. Boom. What is that? 10:07. I mean, I would love to see this break through this channel. And then I think that'll be our long position for the day. And we'll probably let this one ride for a hot minute if that's the case. Wow, that isn't that kind of crazy? Like that channel line that I drew, that was a guess, right? We didn't have another point of contact to actually play to. And literally that was just me visualizing what a relatively straight channel would look like from what the bottom line was set to. That's it. Let it not be said that while the market may be irrational, it does love a good structure. All right, let's see if we can stay above that 200. So again, we're in this channel, so we're long. We're not in the best spot for longs. We could end up getting booted out, and we may have to reevaluate our position. Ooh, she's close. Is she going to close? Oh, that's what we like to see. We like to see buyers hanging out at the spot we want them to. Or not. Well, that hope lasted not long at all. Come on. Come on. Oh boy. Oh, we're so close. So ideally, this is where it's retesting before it takes off. Oh, she held, at least for now. Fortunately, since we did get that first sell on that volatility, even if we end up getting stopped out, we should still be green on this play. But my gut tells me not to get out of it. So you know what? We're going to play a little bit riskier on this one. A break of the bottom channel is going to be our kick out point for these longs. Now I say playing risky. It's risky because it forces us to take on more risk to know if we're right. It isn't risky in the sense of the play doesn't make sense, because it does. It's following everything that we've kind of been discussing as far as play action goes. Now it's holding that point of control. We're holding above the channel where it should be testing before we end up taking off again. So, I mean, logically speaking, there's a lot about this play that makes sense. And we know 100% if we break the bottom, then we're done. We were wrong. We were incorrect. We should not be staying in the play. But oh no. Oh no, 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 no. Let's see if we can maintain this higher lows we've been sitting on. I think we may use this trend line as our exit point, because if it comes back down to test that, there's a pretty good chance it'll end up breaking it. So I know I said below the low, but we're not going to let it get quite that far away from us. There's some aggressive sellers playing. So part of all of this game too, guys, is fully accepting the risk of what it is you're about to do, because there are no guarantees. We can postulate and form hypotheses and make guesses and be like, well, clearly it's going to do this because of A, B, C, X, Y, Z. But at the end of the day, there are no guarantees in this game. Probabilities are just that. There's still probabilities. If there's only a 1% chance you're wrong, well, that 1% can still happen. So we do have to fully commit to the risk that we are participating in here, which is a lot of times why we want to put stops in our plays. Now, obviously, we want to make sure that our stops make sense, so that way we don't get stopped out by candle chop because of algorithms and other things going on. But we want the stops in place so that way we can fully commit to risk based on our own decisions. And when we're thinking rationally, when we're thinking logically, that's the best time to determine where and at what level we're going to accept the risk at. Because if you wait until the price moves to where you thought you were going to accept the risk, you run the risk of becoming emotional and not being able to think rationally or logically anymore about that decision. And that's when you can get the deer in the headlights syndrome. And you can watch what should have been a relatively small loser turn into an account busting loser just because you froze up. So use stops, place them at places that make sense, or at the very least, place them somewhere that if all heck breaks loose, even if you go deer in headlights frozen and you don't exit out of the position like you should have, it will stop you out before you end up doing terrible damage to your account. Oh man, this is some really unfortunate price action. We might be wrong on this play, guys. That's all right. Again, it's part of the process. It's also why we're talking about risk management and making sure that you use stops, because this very well may be a play that does not go our way. And with proper risk management, you don't need to be more right than wrong. I mean, to be completely honest, with proper risk management, you can be mostly wrong most of the time. And as long as the times that you're right, the plays get, the full duration to really run out and play out, it should outpace your losers as long as your losses make sense. Your stops are based at levels that make sense. You're not letting your account get busted up from one position. All right, moment of truth, guys. We're getting there. We will have a lot more confidence if this ascending trend line holds. We'll be able to maintain our confidence if the flat support holds, and we will have no confidence if both of those supports break. Of course, with price action heading back towards this, I mean, it's starting to look the same reason why we logically determined if we broke VWAP, we were going to play long. Now, I mean, we've consolidated along this support. We refused to break it at first, but now we're coming back down to test it. And I mean, every test, the odds of it breaking increase. Coming up on 10:17. Our range on today is abysmal. It is super flat. Flat days can be very challenging to make money in if you are a directional trader. Days like today, or I guess market conditions like the most recent ones we've been seeing, would probably lead to being advantageous for playing different kinds of volatility spreads, like volatility spreads that do well in very low volatility environments, such as condors, butterflies, and whatnot. And I mean, even if you think you've got a really good beat on the day, on a day like today, you could use a broken wing butterfly to situate yourself. So if the action does stay really flat, you'll be in a zone that makes a pretty good chunk of change. Or as long as you just get the direction right, even if it ends up running in favor, you'll still win on the day. But those are some more advanced strategies that we're not going to get into on these streams. Those are for other videos. Those are not things that I play with on a daily basis. Those are not things that I frequently mess around with. So they're just not things that I feel like I need to practice, and they're not really things that I feel I have any authority to really be teaching, or at least providing some kind of education from. Yes, I do use them. Yes, You know, they've definitely been beneficial to my account, but it's not something I'm going to teach you guys to do. But if you want more information on them, you know, just there's plenty of really good resources out there on broken wing butterflies, regular butterflies, unbalanced butterflies, iron condors, iron butterflies, you know, all these different kinds of options plays that you know, give you a different way to play the market as opposed to just directionally. But like everything else, would not recommend jumping into it without knowing what you're getting yourself into. So do your homework first, practice in paper, and it looks like we're going to be kicked out of this position. Got our value low on the day. Ideally, that's where we would like to see the extreme take us back. Let's see if we may have missed something in our analysis, because we've been playing to this downward channel, but we also got like a flat here. So if we assume instead, I mean, we're gonna leave our stop where it is, but we're gonna kind of play around with our analysis here just to see if maybe we missed something. We're gonna assume instead that this was our selling climax, and this was instead our reaction, which would then make this our first test, which then makes this space below a sign of strength for moving upwards. So have we actually broken out of the channel yet? I mean, we thought maybe that's what this was, but it turned out that it wasn't. We thought maybe that this was going to be the breakdown, but then this wasn't. So yeah, what's going on? I think our original analysis on where the channel was forming may have been incorrect. So with that in mind, we actually have a really poor entry at VWAP here, like really poor. So if this long play ends up panning out, I do want to stress that to you guys, that in hindsight, kind of reanalyzing what's going on here, this actually was not a super healthy play. It definitely was a good play for the break, but if we were able to identify that this was in fact our climax, we should have sold our entire position up here at VWAP 1 and just played the break as if it was a nice, quick little temporary thing. So unfortunately, what we could do in a situation like this is, as long as the channel's low held, we could, in theory, add to our long position down here. But because we're already in a long position up here, I don't want to mess around with that, because that would kind of muddy the waters a bit, and I'd have to do a bunch more math. And on top of that, we shouldn't add to a losing position. It's bad practice. I mean, in this situation, it wouldn't necessarily not make sense, but it would be bad practice to add to a position here. In theory, what we should do is we should let this one continue to play out. We should just let that do that, because we've already committed to it. And if that holds, it's going to be a good play. So what we're going to do instead is, if we get an opportunity to play the channel again, we're going to open up a new play in a different strike price, so that way we can futz around with that. So that's what we're going to do. All right, we're coming up on 10:23, guys. Oh my gosh, I just realized the reason this seems like it's been dragging on so long, I accidentally slowed time down. Oops. There we go. We're back in our fast forward mode now. So unfortunately, if this is the true channel, we could get a break lower. That would be our false break below. And then we would get kicked out of our position for that long. But ultimately, that would prove for the upward movement. So, I mean, whatever. We'll lose on that end, but we'll make it up by taking a new position. Man, how long have we been in slow-mo? It definitely has been a while. I can't remember when I slowed it down. And by slow-mo, I mean like regular time. We're playing in 1x as opposed to 3x. I should have known. You're like, wow, it's so much easier to enter and exit. What's going on? I'm giving myself way too much time to overanalyze everything that's going on. Of course, I can do a quick check of implied volatility. All we have to do is pop this open. So currently on the 427 strikes, implied volatility is 11.53, 0.34. So, like I said, or well, for those of you watching the recording, I didn't say it, but to those of you who are in the pre-show, implied volatility does move up and down. I mean, as far as analysis goes for that, though, there really isn't too much to analyze. It's pretty in line with what we saw this morning. I mean, given the price range and how we're moving, implied volatility is really low. I mean, considering 70% is what we consider normal at this current time in the market. So what's 11% when 70 is your best friend? Right? I mean, it's definitely a seller's market right now if you know what you're doing. It's also a very dangerous market to sell in because remember, it's selling puts you in the unique position where you're the insurance company, right? You're offering somebody to take a bad decision off their hands if it comes back to bite them. Now, granted, as a seller, you can kind of, pick what your probabilities are, as opposed to buyers who don't really get to pick their probabilities. All right, here it is. This is probably where we're going to get the false break on the bottom if we're heading up. So this is where we'll be paying close attention to see if we want to get into a long position. I mean, we're already in a long, sorry, I mean a new long position. Jeez, this flat action. This would be a scalper's paradise if I were a scalper. I am not anymore. I don't like scalping. It's too stressful for my blood. Well, at least time's moving. Here, we can make it look like these candles are moving more aggressively than they are. See, look, we'll just make them look bigger. Fantastic. This has been so lackluster. But I mean, it's good to be exposed to this kind of stuff, guys, because the market's not always going to be as volatile as we're currently dealing with. So I mean, you gotta also learn how to deal with the really low volatility, really low range days. Because at the end of the day, we want to be able to make money in all market conditions, not just some of them. Whoop! There it is, the false break. Is it? Let's see. We might be bailing and getting ready to. Yep, okay, that definitely kicked us out there. Wow. It's what, 1041? Geez, we held that play for quite a while. And we're back in long. Of course, the $1,000,000 question. Well, why didn't you just stay long? Well, I mean, we could have, but we would have had to take on more risk, right? How low? How low do we let it go before we determine, yes, that was a false break, or no, that wasn't a false break? That's we can't futz around with stuff like that. I mean, ultimately, if you want to look at hindsight, after everything that we realized, the first place I said I was going to set my stop loss is probably where we should have just stuck to, rather than be like, oh no, we're going to go ahead and play the bottom of the channel, because that clearly worked out really well for us, didn't it? So now that we're back in the channel, we want to see price action stay. If we end up breaking back below, we'll probably exit out of this long and then reevaluate what's going on. But in theory, since we got the false break, we should see price action move at least back up to the top of our channel. Kind of do a little rotation-a-roni. Uh-oh. Looking across here, that looks like it may have just found resistance at an old support. Uh-oh. We might get boned here, guys. Oh boy. All right. New low will absolutely 100% be our stop out on these longs. Feeling a little more confident now that we got this piece down here. We're getting some increase in volume. But if it rejects off this trend line, that's no bueno, Batman. All right, that just kind of moved through this. So maybe this isn't as important as I thought. Yikes. Uh-oh. Uh-oh, guys. Uh-oh. So now we have to stop and ask ourselves, am I letting my bullish bias get in the way of obvious plays here? I don't think so, but that might be more for hindsight analysis. All right, let's see. Let's kind of take a little step back and look at what we've got going on in all of our time frames. I mean, this looks like a pretty logical support spot. Definitely seems like it's been falling through, though. We did have a crossover event here on our 5-minute. And this definitely did bounce off of the 13 on our 5-minute. This looks like it's trying to create a reversal candle on our 5-minute, but it needs to close above here to be an actual reversal. Otherwise, it looks like after all of this consolidation, we're now consolidating in a lower spot, which means, as we talked about earlier in the session, and when we consolidate at the end of a leg, the probability of us continuing to move in that direction begins to increase. But I digress. Let's see. 30-minute seems to be on a pretty solid upward trend line. If the 30-minute holds true, this is this is kind of where we should be finding support for that. So that'll help us hold on to a little bit of hope. What's our volume profile chart telling us? What are you looking like? What's going on here? Seem to be building a high volume node right around in here. Volume is slightly stacked to the upside. Definitely got some value low down here. But can it maintain and hold that value low? Value high seems stretched pretty thin. Well, either way, we are coming up on 11 a.m. So I guess today is going to be a day we trade to noon, just so we can at least see this play through to the end. I like that we're starting to trade sideways through our diagonal line. Sideways trading through a trend line is great for reversals. It is unfortunate that I had it on slower time for so long. Probably could have got through more. Oh well. Lesson learned. Or did I learn a lesson? Well, I guess we'll find out. That remains to be seen. All right. Well, there's some real good sideways breaking through that trend line. Cool. So if we keep pushing up, it's a good sign for another VWAP break. Let's see kind of what's going on here, though. So we've got our point of control. VWAP's above it. Our 200 is below it. Kind of seems to be converging here at this point. So this would be a really good spot to see price action move up and through if we're going to maintain this bullish bias that we have very clearly been favoring today. I mean, I can't stress enough that today we definitely let our bias smack us up a little bit. You know, I almost thought about taking a piece here at VWAP, but I was too slow. Would have been nice. Would have made up for some of our dumb. At least the good news is we've got a better long entry here than we did up here. Let's see, where are you finding support? That same spot we were supporting on before. All right, okay. I like that. So we pushed up. Now it's testing to make sure that support's going to hold. So hopefully we'll run away from that, and that's when we should get our VWAP break. Again, you can hear it in my voice, right? I'm still playing bias to the bull. I can't shake that. But the good news is if this doesn't work out, guys, you'll get a good example of why you shouldn't let your biases get in the way. Because I'm sure once I kind of like do a little bit of a hindsight look at this, I'll see why I shouldn't have been in a bull position. But right now, I'm just not seeing why I shouldn't be. There's definitely some strong probabilities on my longer terms. Although I say that, now that I'm looking at my market profile, we're getting a pretty awful low formed on today, which stands to reason they should come back and try and fix that. So, yeah. And now that I'm thinking about that, I should have known that back at 10:30. I should have got my first real good kick in the pants that I should be abandoning this bullish thesis that I've been stuck on. So a poor low or a poor high, a poor structure, for example, in market profile auction theory, it indicates that we have not moved far enough in one direction yet for a fair auction to be considered. So basically, the fact that we've now built a poor low on 4 periods of today, like every single day has made a poor low, that tells us that we haven't gone down far enough yet to find enough buyers, or we haven't found an unfair low. We haven't found a price that is unfair in terms of the market. So when those structures form, we do tend to see movement away from it at first. When we hit period B, we moved away from the poor low. Again, I mean, you can see it here. We moved away initially. That was all that short covering. And then we came back down. And then sure enough, we get into period C. What happens again? We hit that low. We get that short covering back up. And we come back down. We find that low again. And now we've got short covering. So, I mean, this kind of tells us we should be looking for a good spot to get out. So we're going to go ahead and sell. We're going to sell a piece right here. And if it does not break through VWAP, we're going to just sell it if it comes back down completely through that 200. This is it. You either break VWAP or we're out. Okay. I guess we're still in. We still took a piece here. 1114. Should be a lot of volatility on that too. We're going to go ahead and use a close below VWAP as our exit point for this long, because if the tone hasn't shifted and changed here, then we need to get out of this. Because again, like I said, we've been playing to this bullish bias that has not been helping us out. We just kind of looked at what was going on the day and we realized why. Poor structure does not have to be repaired, but it can, and probabilities start to increase. So let's see if we can get up to the top of the channel here, and that's where we're going to plan on taking another piece. Pivot point, half back. All right, we didn't get stopped at the pivot point. That's promising. Let's see, we're going to have our limit sell for like somewhere in here just in case. Say right there. And that sold our second piece, 1119. So I do want to stress, guys, this looks like it played out to our favor, but I don't want you to mistake what very clearly looks like luck played into what happened here, as opposed to this being a smart play. I absolutely want to stress this, that we got stuck in a bull bias that we definitely should not have been, looking at a lot of other things that were building and forming, and we just got lucky that this did happen to be an accumulation campaign, or if nothing else, a whole bunch of shorts a lot of shorts got trapped here and ran away. But we're going to say that our 13 EMA is going to be the spot at which we're going to close out this last piece. So if this doesn't end up continuing to rally up, we're just going to close the last piece, take whatever little profit we get, and then we're going to call it a day, guys. Hmm. All right, that's it. We're going to go ahead and call it a day there, guys. Let's see how we did. So we took 3 plays total today. We got pretty janked up on our second play because again we got stuck in that bull bias that we were playing to, and we really shouldn't have. Absolutely should not have happened. I let a few things play in, and given the probabilities that we were seeing and what was happening, the market gave us some ample opportunities to take profit and then look for something else, but we did not take those opportunities. So ultimately, we are going to pay a little bit of a price on that one. But this last play, it definitely made up for it. I mean, there's no ifs, ands, or buts about that. This last one definitely made up for it. So let's go ahead and take a gander at what we made today. So I'm going to go ahead and open up a new window here so I can look at the contract pricing. Okay, so let's see, where did we open up? 940 is when we took our first position, and that was a short position. So let's see, the pricing right around there was 424.51. So that probably close. We'll see if that price. Oh no, I'm sorry, I said short. There we go. Let's see what the price was at 940. $1.51. Yep, that seems like a contract we would have played. Okay. Zoom in, 940. Let's see, we'll take the bottom of the candle so that way we won't give ourselves the wick. 1.46. 945 is where we sold our first with the volatility, so that's a nice little pop, little pepperoni. 950, we sold our second piece, and that was as it was coming back against us. Right? Oh, no, it wasn't completely back against us. That was the candle that I looked at and I said, oh, it's closing above that. So let's see, that would have been not bad, not bad. 10 is when we got rid of the last piece. That's 10:01. Oh, that's right. It broke the 200. That's why we closed that out. Okay. I'll call that 149. Awesome. Okay, so that's for our first one. So second one, we went long at 10:06. What was the pricing at 10:06? So right around 424.42. So it's probably there, yeah. Let's see, what was our pricing? 10:06, it was 140. No, that would have been a little bit light. So we would have actually been on the 423s. Let's see, 10:06 was, yeah, 200. That's better. So unfortunately, we're probably going to be eating something a little bit rougher on that second one because we definitely would have been playing more aggressive contracts. But that's all right because we would have been playing the same aggressive contract for our next position. So let's see, 1006, then 1007. We immediately sold a piece for some volatility. And then we done got boned. 1041. 1041. Oh man. Yeah, that hurt. That hurt a lot. Let's just look at what was going on there again. Oh yeah. Yep. I remember. 1.78. Yeah, that hurts. It hurts. It hurts a lot. But we bought at 1042. So we would have flipped and reversed. And we sold at 1114, our first piece. Wait, what? Yeah, 1042. 1114. 92. Second piece at 1119. And then our last piece, we got taken out 1126, and we called it a day. All right, let's do some math. All right, so first position, we took it 1.46. Since we play in thirds, we're going to multiply that by 3. And we are going to subtract our first cell. We're going to subtract our second cell. And we're going to subtract our third cell, giving us 31 cents on our first play to the positive. Now this next one is the one that's going to hurt. We lost 27 cents on that one. So the good news is our first play did pay for our flub up on the second one. And the fact that we did take our first third with some volatility also helped. So just a good note, a good lesson for you guys. And it's one of the reasons why, I play in thirds and I always like to take my first piece with volatility. It ends up helping out. So that way, if you do get really boned on a play like I did there, being able to take a third of the risk off the table and take some profit with it, it actually reduces your overall exposure and how much risk you're, going to take with letting the other 2/3 kind of play out. All right, and our last play, the one that definitely saved our bacon, which was luck. I definitely 100% want to stress that. That was a luck play, but it's okay. Those happen. You just have to remember when they are luck, so that way you don't accidentally think you are smarter than the market. Because I can tell you from personal experience, when you start to think you're smarter than the market, it does not work out well for you. So we made 68 cents on that last play. So let's see, we'll subtract our winner. Subtract our loser, add our winner, and we ended today positive 72 cents. So unfortunately, that's a pretty far cry below what our goal is. Our goal is to hit, on average, $2 a day. So it's, we're $1.30 short, but that's okay. Because remember, there's going to be days where you'll hit much bigger. There's days where you're going to be hitting smaller. And there's probably going to be days where you're going to end up ending in the red as well. So we got to take it all in stride. And we got to recognize that it's an average over time. So 0.72 on the day, guys. This was a really flat and apparently challenging day for me to trade. Again, looking at some of this in hindsight, the bull bias that I was forming, I definitely got stuck in, even though we can very clearly see. I mean, just look at the EMA clouds alone. This tells us that sellers were dominating the entirety of the market for, from 941 to the sudden shift at 1112. So, those are things to take into consideration. Our long-term chart definitely supported the bullishness, but our long-term chart didn't support bullishness until we actually broke here, which again, that's when we played our bullish position, right? This event is what supported that. Now, what about that started to deteriorate the probability was that in our profile, we were starting to build a poor low, right? Because this was one event, but then as soon as we came over here to our second half hour when 11 o'clock started, we ended up making that poor low again. So our initial run was up and away from it, which, fortunately we were in a bull position. And because we recognized that we were in the short, that's why we decided to just take our profits, right? We took up here. In hindsight, we probably should have taken the second part up here as well. That definitely would have helped out, but we didn't, and that's just the way the cookie crumbles. So one thing that we're going to do real quick, guys, I want to let this play out for just a little bit longer, because I think strongly that this is going to come down and make a new low now to repair that low. We did make a poor high right here with this, but I want to see how this kind of plays out now. So, feel free to stick around and enjoy that. There isn't going to be any more play going on, but let's see. Actually, here's what we can do. Let's just go to the end of the day. Wait, no, I think this is 24-hour time, so that would be 11, 12, 13, 14, 15, 16. Yeah. Oh, what do you see there, guys? Wow. Oh, snap. Oh my goodness, wow. Whoa. Okay. So, you know how I said structure likes to repair itself? This was unexpected. But if we were still playing, following the run here, this would have been a great place to get short. Like everything about that told us that it was a good place to get short. Now, unfortunately, because we kind of had that bull bias just absolutely wrapped up in our heads, I might not have made that play. I can fully admit that. I may not have gone short there just because I would have been still stuck on that bull train. But here we go. We come up, we make a lower high, and man, it just, oh geez, just for giggles. Wow. What the heck happened on this day? Like what the heck happened? This was June 16th. Something happened on June 16th, 2021, and I'm obviously not remembering it. But look at this. This is our midterm point of control. So, I mean, if we had played short here, we would have had no reason to get out of it for quite some time. I would have said, watching this just crater like this, if we still had a piece on right here, we probably would have just sold it at this midterm POC. Because again, we've talked about this before. Points of control tend to be where auctions end and begin. And sure enough, this very violent auction moved down to our midterm point of control. And then we did have a little bit of a rally back up. But just for GPs, so 1128 on our options. So these were the shorts that we were looking at. These were the shorts that we were playing. Wait, that would have been 424. Let me just make sure I've got the right ones on. Right, yeah, because that was 165. Okay, so if we had actually taken the short off that second peak right here, 1128, that didn't end up going anywhere. We would have got that for roughly 81 cents. So we probably would have been playing a more aggressive option, just because that's too low for our blood. 1121. 136. Okay, so the 425s are a little bit more in line with what we would have been playing then. So that's $1.36, and we would have sold it at that midterm POC for $5.46. We would have sold that for $4. That would have been the play of the day. Now, of course, those aren't always going to happen, right? You know, this very clearly is an anomalous event, considering how just, flat everything was, and the days before that, how everything was nice and flat. I think here, let's just to kind of review, let's look at what was going on, right? So here was the last 5 days, and then just boom. What? All right. But cool stuff, guys. So anyways, as always, guys, I really appreciate you hanging out with us today. Glad I was still able to end today green. I'm definitely not super proud of how I traded today, but I hope through the mistakes that I made, you guys did pull some lessons from that. That's why I made sure we took a little bit extra time to post-analyze everything. We don't always do that. But again, don't get stuck in your biases, because we had a very good opportunity to short there, right? We were at the top of the channel, and then we just made a lower high. Like that's flags everywhere. And of course, on top of that, I told you guys we had that poor low that formed over 4 periods. So that massive run that we got where we were long on, we were bullish in our bullish bias, that was short covering, getting out of the way, preparing for this nonsense. So the market's always moving around because, the big boys are positioning themselves. They're not dumb. Well, some of them aren't dumb. But anyways, guys, if you like this series, please like, subscribe. I apologize that this one is definitely a heck of a lot longer than I intend for it to be, but hopefully there was some really good nuggets of gold. Till next time, I'm Dan, and I'm out.